All right, so Real Estate Mavericks is very proud to welcome Donato Callahan from Bright Investor and Timberview Capital to the show. Hey, welcome, sir.
Thank you very much for having me. I appreciate it.
All righty. So, I guess I'd like to start it off with, a big warm welcome here. And it's nice to have you on the show since you're newly retired at age 24. Can you give us a little background on that, Donato? How you retired at age 24?
Yeah, so now that was almost 2 years ago now, which is crazy. Being 26 and today, and at that time, I was working as a geospatial analyst for the Department of Defense by day. So, working with senior policymakers and intelligence analysts, and drafting briefs, doing intel, and helping assist operations. So it was that by day, and then by night, co-founding a software company for real estate investors and property managers, and buying commercial real estate and running my own real estate. So it took
Nice.
about 2.5 years of doing all this work before I was able to retire from the DoD and just do real estate and tech kind of pretty much full time, and do that and as my heart's content. And in the 2 years since, it's just been, buy more real estate, keep building the companies, and was able to step out of the traditional W-2 route. And so now, I can work how I want, from where I would like, and I'm able to do it with really cool people. So it's been a really nice uh,
Mhm.
transition to do the projects that I really like.
Nice. Well, Donato, yeah, it's a real privilege to have you here. Your journey from national security to becoming a prop tech visionary and a significant player in real estate, truly, truly inspires all of us, especially at your advanced age. And I won't kid
Mhm.
you anymore on that one. You're still only 26. So there we go. Um, yeah, for our listeners today, we're going to explore how data, technology, and strategic thinking are kind of really reshaping the real estate investment landscape. And Donato, with your background at Bright Investor and Timberview Capital, you are uniquely positioned to share your insights on this. Um, yeah, and so with that, let me jump in here. You know, perhaps we could start with you taking that leap from national security at age 24 to full-time real estate investor and tech visionary. Very bold move. What was the light bulb moment for you, Donato, that convinced you to make such a significant career pivot? And how did your experience, as a geospatial analyst, the DoD, directly translate into your early real estate ventures?
Yeah, so I got started in real estate when I was a senior in college. So I joined a paid mastermind and spent my entire senior year. I was working for a property management company just to learn the business. I was doing cold calling and texting and direct mail for off-market properties, hiring VAs, just doing anything I could to learn, until, deciding to get into buying and holding in larger commercial complexes and things of that nature. And so I knew I wanted to go that direction after I, put my money into stock market when COVID hit and lost like half of it, pretty much like overnight. And
Yeah.
while I still believe in the market's long-term abilities, it really kind of shook me in that you're telling me that millions and millions of people, base their retirement and their income off of these numbers on the screen that can go up or go down based on 1,000 different things going right or wrong. That doesn't sound very secure to me. So I wanted to
Mm.
find a way to be more in control of my wealth building that was more tangible. And so that brought me to real estate and led me to look to acquire properties. So I bought my first personal property the day I turned 22, bought a fourplex,
Nice.
and in St. Louis, and I continued to acquire more and more. And the work at the DoD, helped me really a lot into the launching my software company because our product started as like a market research mapping based tool that was very similar to what I was doing at the DoD, for geospatial information, or basically images and maps and things you can see on, with your eyes. So using that geospatial information and seeing what it looked like to work as a W-2 employee and like how people thought, what their lives look like. Was both good and bad because it showed me the power of leveraging a good W-2, but it also showed me that it wasn't something that I wanted to be in for the rest of my life. Because I
Mhm.
believe in outsized effort for outsized results, and the government is very much we will reward those who sit here for 8 hours and do so for 40 years. It
Yeah.
wasn't quite my cup of tea, and it was the absolute epitome of secure, solid job, could do that forever. Cool work, interesting, but just personality kind of mismatch in
Yeah.
terms of what I knew I was capable of and what I was able to realize while I was working there.
Nice. Well, for our listeners here, Donato is a DoD Smart Scholar and graduated magna cum laude in biology. How does your background in biology and geospatial analysis, again, at a deeper level here, inform your approach to identifying high growth investment markets today, particularly your focus on GIS technology?
Yeah, so being a biology undergrad, right, I originally thought I'd be an environmental engineer, and I believe in the scientific method. I believe in what you can see and measure and, be able to implement in real life, taking, different qualitative and quantitative data sets. And so when I applied that to real estate, it was very much, well, there's enough numbers circling around somewhere to help inform whether or not it's going to be a good investment decision. And time again, as I've gotten more skilled at the practice, being able to take a variety of pieces of information, which ultimately is boiled down into my software company, Bright Investor, allows me to take these bets on specific real estate properties that have continued to work out really well for me. So my most recent deal was a 6 unit building I got in St. Louis a couple months ago. And from the time that I found it to when I had an offer on it was maybe, 24 to 48 hours, right? And it is because I was able to take all this information that I needed and look at the property, look at the market, look at the financials and say, wow, okay, here's all the things aligning. So I was able to take a lot faster action than anybody else because I
Right.
could recognize the opportunity through the numbers. But today, my biology degree is very useful in terms of I have a nice piece of paper to cover up some holes in the wall.
I
um, Very useful. It's it.
like it.
I wouldn't be where I'm at today without the Smart Scholarship and what it gave me, paying for school and giving me a job when I graduated. So I'll always value what I was able to do in college, and it wasn't a waste for me at all. But it was very much a stepping stone to what I eventually ended up doing, which is where I'm at today.
Nice, nice. You're advocating vertical integration, stacking the tech with your real estate skills. Very
Mm.
compelling. Can you explain that concept a little deeper and share how it has given you and Bright Investor kind of a competitive edge here in a crowded market?
Yeah, so I do firmly believe in like the vertically integrated person. It's going to be the main topic of a book I'm working on, and it's in the background, where as time and economy has continued to move forward in terms of how we process labor, how we process capital, and how we process innovation, I found that there is a consistent push towards people want the highest amount of trust and the highest amount of capacity as consolidated as possible. So what people and want is they want fewer people in their businesses and fewer people in their lives, but they want more from those people. So I use the example all the time of like when you hire a really good painter for your house, you're like, oh my gosh, this person, they showed up when they said they're going to show up. They billed me fairly. They did high quality work. I love them. Right? The first question people ask is, well, do you do anything else? Can you replace my windows? Can you patch my roof? Can you do some landscaping? Because once you form that bond and that level of trust with that individual, I kind of subconsciously apply high level of trust with high level of capacity and capability. And so what
Okay.
people want is for you to be able to have or two people that can do more things for them because they've proven trust and capacity in this one area. So whether or not the individual can actually perform those things is another question. But what people want from who they work with, who they do life with, they want the people and they're around them, to be vertically integrated. They can do more and more with them. So as a young person coming in this economy, and gratefully I graduated like a year before AI hit the market. So that was very great timing on my part. But we're seeing that more and more jobs and more parts of our economy are going towards fewer people that can do more of the stack. So as opposed to having like five project managers, you might say, well, I'm an individual and don't pay five project manager salaries. I'll do project management plus quality assurance plus quality control for, I'll do the work of four property man or project managers for 1.5 to 2x a salary. And
Mm,
that really resonates with employers. And with
yeah.
technology on my software company saying, okay, great. Well, what is it? What do people want this company to be able to do? Well, they want to be able to find properties. Okay, great. But then when they find a property, they want to know if it's a good deal. So they need to be able to see, what's the value of nearby assets? Okay, great. Well, when they find that, they want to know what it would rent for if they were to own it. So we implement that component. And then you kind of walk down the problem highway
Mm,
and you start just have walking and walking and walking until you get to the edge of your scope, until you become like a whole different platform, and you find ways to integrate more and more parts of their process so they don't have to leave. And if they trust you with one thing, they want to trust you with more, which directly translates into upsells, cross sells, new products, and things of that nature. So consolidation is where the market's going,
yeah.
both in people and in technology. And the more that people can lean into it and upskill themselves, it gives them a competitive advantage.
Okay. Got it. Yeah. Now, you've built a SaaS platform with over
Mhm.
250,000 lines of code. What was the biggest challenge in translating complex data analysis, into some kind of an automated, user-friendly tool, yeah, that you or other people can use comfortably?
Yeah,
Uh,
for the user friendliness, gotta give all my credit to my co-founder. He designed all the pretty front end of the product to
okay.
take what I thought of. Here's what it needs to do from the real estate side and the technology side. Can you make it pretty? And he was like, I can make it pretty. So I got to give him
Okay.
credit for all of that work on the front end. But a lot
Yeah.
of it came from after that initial launch, a lot of feedback. We've been on the market now for 3 years, and we had a year and a half of development before them. And a lot of our development the last year and a half has been completely user driven on how do people engage with the product, right? What do they want from it? How do they want it to work versus how does it currently work? And taking all that feedback. So we're currently just a few weeks away from launching our Bright Investor 4.0, which is the culmination of we completely rewrote the back end of the product. We have a whole new user interface, tons of new features, which is all predicated off of watching how our customers and our users like to use the product and how they want to use the product. And so I would say, especially in an era of AI, what we have leaned away from is just building for the sake of building and really leaned into slow, methodical, iterative approaches to, I know it can do this little functionality, but how can I serve someone? Here's what they want, right, from me, and here's what they need. And how can I serve both? And letting it naturally develop. I think there's a lot
Mm,
of risk in pushing too hard, too fast when things are in the foundation is shaky. So I prefer a
yeah.
mechanism of how can I get this in front of people? How can I test it? How can I see what people want from this? And then
Okay.
iterating from there and then being willing to stay in the game long enough to watch the fruit of that labor.
Nice. Nice. All right. So, Donato, your company, Timberview Capital, is managing over 550 units, significant portfolio, despite your advanced age. No, no, I said it again. Sorry. Only
You're totally
26
fine.
years old. Yeah. So your analysis is very important here and what you've achieved so far. So, how do the data-driven insights from Bright Investor directly inform your multifamily syndication and investment decisions at Timberview? How does it directly inform them?
A lot of it comes down to being able to model appropriately. So a lot of deals come across the desk and they're based off a variety of assumptions, right? So exit prices, cap rates, debt, income and expenses from the T12, and a lot of different
Okay.
projections surrounding what they can get for rent, what they kind of have to spend to get there, and what the market's going to do as a result of it.
Hmm.
So one of the big questions we have to answer is how realistic do we feel this is? And so using sub-market information like population, rent growth, and new deliveries, and state of the market in terms of lending and cap rate environment feeds into what deals you might want to participate in as a co-GP. and what deals we think are a little outlandish. And
Hmm.
ultimately, the future can tell us what deals are going to end up performing well. And what that means is the way that I approach it, I optimize for reduced downside as opposed to oversized upside. So kind of the opposite of the venture capital route, which is, make 100 bets, one or two pay off, and that covers everything. Because of how I just am as a person, I prefer what can I do right now, and where if I make this decision, will it pay off right now, and will it does it have the potential to keep paying off in the future based off
Mhm.
a reasonable approach to executing this business plan. So it means that maybe I participate in 20% of the deals that get brought to me, or
Yep.
and everything else we say I just don't see it. And
Yep.
sometimes I'm wrong, and that's totally fine. But when I participate in something, it's because I believe in a very straight line, executable business plan that addresses the downside risks appropriately and leaves a clear path for upside.
Nice, nice. So you're very protected on the downside and looking forward to the upside. All right. You mentor over 200 students here, Donato, and you frequently collaborate with other industry influencers, such as yourself, on educational webinars. How do you manage to balance such a large investment portfolio and a prop tech company, uh, also with your passion for education and mentorship? How does that work for you?
Yeah, so there was a time like maybe a year ago that I think I did like 27 meetings in one day and was doing like nearly 100 meetings a week.
Mhm.
That's too much. And so the
Yeah.
answer is be young, unmarried, no kids, and do work 100% of the time. At least that's what worked for me. And then do that where you burn both ends of the candle and the middle at the same time. And then do
Okay.
that to the point where your family's like, maybe you should stop. Do that for another year after that point in time, and then finally start whittling it back. So now, my students, I've stepped away from some of the larger group calls that I was doing. I have a small handful of one-on-one students left. That I still work with, but I've stepped away from it largely. I still will meet with occasional students, but I'm not growing that part of the work. I don't advertise that I work with people. It's more something that, if I like you and we get along well, then, I'll help you out to the best of my ability. And then you have to be able to, I would say, affectionately manage what you can manage and then be
Yeah.
willing to delegate what you can't. So I
Yep.
used to be way more involved in the development of the software company. Now I do primarily the enterprise sales, the sales calls and demos, and like basically marketing vision. With my personal portfolio, right? I have software and systems that handle most things, and then I have some gaps where I'll help route work orders and some leasing staff. But I have some plans for the summer to help fill those gaps. But most
Yeah.
things, like 70 to 80% of my previous involvement, I have gotten rid of or I delegated out, and I kind of sit in where I can be the most effective. And
Hmm.
knowing why I'm doing things. So the reason I do things today is different than why I did them, 5 years ago. And knowing that doing more and having more on the schedule doesn't necessarily mean, a greater sense of satisfaction or a greater
Yeah.
output for me
Yeah.
or the people that I'm working with.
Okay. Hey, so if you were to be looking ahead, putting on your crystal ball here, what is the next frontier for prop tech? Where do you see the biggest opportunities for innovation in the next 3 to 5 years? Perhaps especially concerning AI's continually increasing role in real estate investment management.
Well, I think what you're going to find is even further consolidation. I think everything around the real estate transaction has really been in question recently. So we saw Redfin and Realtor.com. We saw Anywhere and Compass. We saw Real just for this last week, right? Real and Remax are consolidating. And so a lot of people in the transaction space, right? So like people, so realtors, lenders, insurance companies, inspection companies, appraisal companies, title companies. Um, and I think you're going to see a lot more consolidation from a private equity space wanting to buy like the service-based businesses that serve transactions. You're also
Okay.
going to see fewer and fewer agents that are doing more and more volume as AI allows them to capture more of that market share. So I think we're going to see agent count continue to go down. I don't think interest rates are going to come back down to 2 or 3% anytime soon. I think we might get down to maybe 4.5 to 5.5 pretty consistently, but not for a couple of years. And I do think that in technology, what we're going to find is that the people who are the most personable and have the best ability to sell and the best ability to um, have client relationships powered by a reduced need for labor and an increased reliance on technological solutions for fulfillment are going to continue to dominate in the consolidation that we're seeing across tech stacks. And
Hmm.
with that, what you have is a lot of service-based businesses that might want to sell or merge that want a tech company multiple and sale price. So you're going to find companies like that are legacy companies, right, that want to find and acquire and merge with tech companies so that they can turn around, reduce headcount, reduce expenses, and then sell their own organizations at a much higher multiple by positioning themselves as a tech company. So people are going to look for ways that they can take tech and bolt it onto what they're doing to achieve higher valuations and make their exits. So I do think anyone that can keep purchasing real estate now as an investment vehicle is going to do very, very well over the next 5 to 6 years. And I do think that as long as they don't overpay, as long as individuals continue from an investor perspective, as long as those people continue to want financial freedom and time freedom that can be provided through real estate, we're going to continue to see people move into it. The only question is what's going to give first, right? Is it
Yeah.
employers raising incomes? Is it interest rates declining? Or is it home prices coming down and real estate prices coming down? And of all those things, right, the interest rate's the easiest lever to pull. So at some point, it's going to continue to come back down. Might not be as
Mhm.
soon as people want, but it pays to be in ownership position before that happens,
Hmm.
so that we are able to capitalize on rising prices at those times. So what I'm going to do is buy as much real estate as I can over the next 3 to 4 years, keep building my portfolio, and then get debt at 6 or 7%, and maybe even 8%. Have properties that cash flow with those numbers, right? And
Yeah.
then when I can get debt at 4.5%, refinance everything.
Refine
And
everything.
so
Yeah.
I'm not,
Yep.
yeah, so I'm not competing with, so I'm not going to go compete on the sales side. I'll just refinance everything, boost my cash flow even further, and then just maybe pick up one or
Yeah.
two properties here and there.
Yeah. Okay. What what's one crucial piece of advice that you would give to a starting real estate investor today who's looking to leverage the technology more effectively in their own business?
I would tell people be cautiously optimistic and have a significant amount of belief in your numbers, right? I am someone who fervently cuts through all marketing materials.
Yeah.
I do not believe hype. I do not believe pretty much anything that anyone tells me when it comes to an investment opportunity. I verify it all. I
Yeah.
say I'm very much I'm an optimistic kind of guy, and I believe people should be asking the question why not more than they ask the question why. But when it comes to investment, right, use it to help make your judgment faster, not replace your own judgment. So that's what I would really advise people to do, right? Anything you're going to use technology wise should be to help do what you're going to do faster. And I say that in the sense where I could get someone could come to me and say, Donato, I have this doohickey, right? This little tool. It
Mm.
fits in your hand, right? And you can go to a wood car, you can go get like a big cut down piece of timber, right? And this tool will carve this amazing thing out of this wood for you, right? It'll do 99% of the work. It's gonna look fantastic. I'm like, okay, awesome. I could have that tool make this product and have no idea if the end result does anything more than look good. I don't know if it's sturdy. I don't know if it's strong. I don't know if
Okay.
I did it right. And
Mm.
so what I think people are missing a lot of the times is that everything we're building right now is a tool. The tool. If I hand a shovel to a kindergartner, right? They can't use that tool. They might know it's a shovel, but can they actually drive it into the ground and dig a hole? No, because it's the wrong tool for the application, or they don't have the capacity to know the output of that tool is valid. They don't have the capacity to leverage it. So tools are not a replacement for thinking. They take skill and expertise and they make that person or thing do work at a higher quality, a faster way, or be able to do it more frequently. But it
Mhm.
can't do the work for you. And if you don't know what you don't know, you're going to end up in a situation where Claude or Gemini or ChatGPT says, "Oh, it's a great property. You should cash flow like crazy. Make this offer on it." You buy it, and you're in a situation where I'm negative $1,000 a month. What's going on? Because you
Mhm.
didn't stop to actually decide whether or not, very famous Jurassic Park quote, right? You're so concerned with whether or not you could, you never stop to think whether you should. That's what I see with all these tools.
Okay. Okay. Um, just recently here, Morgan Stanley came up with a research report outlining that companies that fail to integrate the AI into their systems could be facing a 25% haircut in their valuations. Have you seen that report, or do you have any comments on how that might affect real estate companies and also investment companies too? People that are very slow to integrate this into their systems.
Well, I think that depending on the scale of the company, there are different benefits to leveraging AI. I mean, one of the benefits of being a small company or SMB, right, is that you can move more quickly. So AI, you're probably not going to see too many cost savings from a small business perspective, right? You might cut a couple subscriptions here and there, but the main value is that you can do more and increase your output. For large, mid cap to large cap companies that are implementing AI, I think that I would wager, and I haven't seen this report yet, but every single value creation report that I've seen thus far in AI that talks about increase in productivity or gains there really is just talking about reducing headcount. Right?
Okay.
That's the only logical straight line cost they can equate with AI is I can reduce my headcount. Right. So when you have maybe 5,000, 10,000 employees, maybe more than that, 50,000 or 100,000 employees, you can cut 2, 3, 4, 5% of those people, and you can drop that. Either you can reinvest 30 to 50% of that into AI, keep the rest for the bottom line. That's going to reward your shareholders. And I think comparatively, if you're an S&P 500 company and the investors have the capacity to invest in companies that are streamlining their headcount and returning those additional profits as a dividend to shareholders, and you have companies that aren't, that you're going to absolutely see
Yeah.
consolidation from investment shares perspective into the companies that are rewarding that. Now, what I don't know is how well those changes will survive the test of time, or are we going to see a metaverse level catastrophe in terms of billions of dollars being poured down the drain, and then only have a massive pivot later on. So I don't know if these cuts or these ways that companies are driving more value are sustainable long term. Some will be. I don't want to sit here and say that no use of AI at a wide scale is sustainable. I think there are going to be some, but I don't think we can sit here yet and say which companies instilling artificial intelligence, other technologies, in which ways are going to drive the most short and long term value without
Mm.
effectively kind of kneecapping the company's growth and ability to survive long term when you have generational expertise or talent leaving in such large swaths.
Right, right. There we go. The argument, for the humanity of everything that we do here. So, um, I guess any final thoughts here? And also, Donato, where can people find you online if they want to get a hold of you? And I bet they would. So please share that with us.
Yeah, so people can go to my website, donatocallahan.com. They can find me on Instagram at Donato_Callahan. You can also shoot me an email, Donato@brightinvestor.com. And I'm happy to chat with people or, have a conversation about real estate or mentorship or what they should do in today's market. I think there's a lot of really cool opportunities. And if that's why I keep buying in real estate and I keep developing what I'm doing. So I either I'm teaching real estate, I raise money for real estate, I buy real estate, I build tools for real estate. So all these things are in the same bucket. So I'm fortunate enough to be kind of keeping an eye on all these different verticals. And one thing that I know does not go out of style, profit. And one thing that also does not go out of style is independence. And if you're able to go out there and create something, a product, a business, or what have you, that creates consistent profit, that generates independence for you or your family or what have you, There's always going to be someone that wants to acquire that asset, and you're always going to have the capacity to say no to things that don't serve you, and you're going to have your own kind of little island of to watch the rest of the
Okay.
world do what it will. So that's what I
All right.
pursue, and that's what I recommend people keep their eyes out on as they go to make their own islands.
All right. Donato Callahan, thank you so much, sir. It's been incredibly insightful here. Your ability to blend your technical expertise and practical real estate investment strategy, truly remarkable here. And I appreciate your presence and your sharing your wisdom here with everyone else on the show. And good luck in future. You've got a massive future ahead. I think everybody can tell. All right. Thank you, Donato. All right.
Thank you.
You got it. Take care.